All right, we'll go ahead and we'll get started. So thank you for joining today. My name's Ivory. I'm the owner and founder of Insight Strategies Credit Repair. We work with borrowers who have a goal of home ownership, which means we work directly with loan officers and realtors every day. We hold webinars specific to loan officers and realtors, and also quite a bit of webinars for borrowers as well. So throughout the webinar, please feel free to ask me any questions. I do want it to be interactive. And with that, we'll go ahead and get into today's agenda. Today, specifically, we're going to be primarily focusing on a couple of different case studies. So these are real client scenarios from clients that we've worked with that we've helped improve their credit score so they could qualify for a mortgage. And then at the end, we'll be talking more about how credit repair can be beneficial for loan officers by creating client trust, generating client referrals, or more borrower referrals, if you will, and then how it can help with your bottom line revenue as well. So why do our clients come to us? And that doesn't mean us as in credit repair, it means all of us. So I want to explain first what credit repair can do for someone. And I've changed this client's name for their privacy, but I'm going to be using the name Amy. So our client Amy came to us with the dream of purchasing a home. She had been renting this property for 20 years. The owner of the property was ready to sell it, and Amy was ready to buy it. Amy's children had grown up in the home, and her late husband had passed away in the property as well. Unfortunately, he had had a fast-acting cancer, and she had done everything she could to help him fight it. And as she helped him, her medical bills, or his medical bills, had continued to pile up and pile up and pile up, and she couldn't afford to pay them. And after his passing, she worked very diligently to make sure that she paid each and every medical bill off. They had already gone to collections at that point. And in paying them off, she thought that she wouldn't have no problem qualifying for a mortgage. She had no idea they were going to stay on her credit report. And so what happened is she applied for a mortgage, and she was declined. Her credit score was too low. And so what were we able to do for Amy? Her loan officer did refer her over to us for our services, and we were able to remove 20 collections from Equifax, 12 from Experian, and 14 from TransUnion. And so for Amy, this meant she was able to buy the home. She was able to buy that property that she had spent a lifetime in, that she had raised her children in. And she was able to create the security that she had dreamed of. We were able to erase her fear of what the future may hold. And so with our combined efforts, as both the loan officer and both us here, we were able to take someone's dream of home ownership that they now thought was gone and make it a possibility. And every client that comes to you has a backstory. When we're busy and we have millions of different tasks to do, ranging from issues with closings, trying to get documents from new applicants, dealing with the never-ending list of follow-ups and tasks, and just trying to close each loan as cleanly as possible, while making the borrowers happy, realtors trying to make the clients happy and the loan officers happy. Everyone's just doing as much as they can with a limited amount of time. It can be hard to remember that what we're doing every day is changing people's lives, especially when we are nose down into the grind. You're helping people every day who may have thought they could never own a home. And they're able to then raise their family or create a happy environment to create a legacy for their future generations. So we owe it to our clients to always try to do better and give them our best efforts, especially when we're in a time where it's easier in some ways to find clients. Hard to find homes right now, but easier to find those clients, and more often in situations where loans are coming at our feet. Some of the clients that aren't the cream of the crop, low debt to income ratio, best credit score, can get left behind. And that's where we can really make sure we can help. So according to data from Credit Expert Inc., In 2020, 67% of all mortgage applicants could move up at least one credit band. This could mean better terms or even the ability to qualify for a mortgage for those whose score did not currently qualify. So this data is from 2020, so it's a little bit older, but it's what we had available right now. So what would happen if we went the extra mile to help every single client get that 10 extra points, or to help a client that's not even close to qualifying to get to that point? We'll talk about that a little bit more at the end, but first I wanted to look at what is possible through credit repair with a couple of our client scenarios, and show you what a typical credit repair client looks like. So we'll look at two very different case studies. These clients are from, I would say, on either end of our process. We tend to get a lot of different types of clients, and I think the second client may surprise you as far as who they are and the fact that they do go to credit repair or want credit repair. All right, so we'll dive into case study number 1. So in this scenario, this client has a high amount of credit card debt, so a lot of credit card bills and an excessive history of late payments. So they had a lot of late payments on closed accounts, on opened accounts, on credit cards that still had high balances now. They had multiple collections, and when they came to us, they were referred with a median credit score of 533. So this client felt overwhelmed. I'm up here in the top corner here. They felt overwhelmed with the negative accounts. They were in a better financial position, so their income had increased, and this is pretty typical of a lot of the clients that do come to us for credit repair. They're in a position because they are looking for a home now, because now they're feeling more secure, right? They're feeling that financial security and feeling like they can take that next step in their life. But their credit is what's holding them back. So they had the money available, but didn't know what to do with it. So they wanted to know how to prioritize paying down debt and how to improve their credit. Their ultimate goal, as with every client we work with, was to buy a home. They were overrun with a collection agency making a new collection after new collection and not knowing what they actually owed. So consistently, we would see a letter for small amounts, $40 here, $100 there, in medical collections coming to them multiple times a month in many cases. The other goal was to resolve cash flow issues with higher debt to income ratio. So while we focus on improving credit, we also focus on that debt to income ratio. And as we are improving credit, often we can improve debt to income. We can refinance things, do debt consolidation loans, and reduce that total monthly output. Or when we're refinancing, we can, auto loans tend to come up quite often because we can get a lower interest rate on those auto loans. And then, of course, that means a lower payment as well. The client also needed, in this case, for us to resolve judgments that were placed against him. So we didn't have any issues at closing. So some of the key strategies we implemented in this client's case was working on validating collection accounts, and making sure that medical insurance was being billed. So when we see medical collections on credit reports, it's not uncommon for them to be billing issues. It's not uncommon that these bills were never even sent to the insurance company to be vetted first before the borrower, in this case our client, is being billed directly. We disputed the late mark history on several accounts with inconsistent credit reporting. So what does that mean? What that means is whenever there's late payment history showing up on a credit report, if it is inconsistent across Equifax, Experian, and TransUnion, that's grounds for that late mark to be removed from a credit report. So let's say we show a late mark in July of 2020 on Equifax, but Experian and TransUnion show that late mark in August, not in July. That's mismatching information. That's mismatching account history. Similarly, if that late mark only shows up on one bureau and not the other two, or on two bureaus and not the third one, any sort of inconsistency displayed with late payment history is grounds for getting that removed, because the Fair Credit Reporting Act says that anything that appears on your credit report must be accurate and it must be complete. So it can be argued it is inaccurate if it is not consistent. So that's how those late marks are approached. And then with this client as well, the other strategy implemented was establishing new positive credit history. Payment history is 35% of the credit score. It's the biggest overall factor. So we can influence it, again, of course, by removing late marks, but also by adding good positive history. And we can do so without adding a large amount of debt to one's credit report, by adding things like rental payment history to that report, or by adding utility bills, doing the consolidation loan for large amounts of credit card debt as well. That allows us to positively decrease credit utilization and then add good payment history going forward with that new account. And then, of course, they're actually paying down their debt rather than cycling in circles of just paying a bit really high interest on credit cards. And so that's part of what we had done next with this client, as a debt management plan to tackle the credit cards. So the credit repair process for this client and many clients far surpasses just looking at removing negative accounts on the credit report. It really looks at what are all of the factors that are negatively influencing their financial picture, which creates the symptom of then poor credit. And then for any collection accounts that were deemed valid, they were following the letter of the law. It was something that client owes. They had proof that client owed it, and the way it reported was compliant with the law. That allowed us to then work with that client on offering payment in exchange for getting those accounts deleted from the credit report. We never coach a client to just go and pay a collection. And we don't do that, because if they just pay the collection without coming up with an agreement with that collection agency to remove it from the report, it just shows up as a paid collection on the report and then can stay on that credit report for up to 7 years. So it doesn't actually result in anything that helps the credit score. A paid collection doesn't improve the score in any way. So the result for this client after implementing these strategies we were able to get 10 negative accounts removed from Equifax, 12 from Experian, and 9 from TransUnion. We were able to remove all late payments for 3 accounts on Equifax and 4 accounts on both Experian and TransUnion. In total, this client was able to see a 137-point increase on Equifax, 123 on Experian, and 125 on TransUnion, as you see here. So the validation was not successfully provided on many of the collection accounts, which is how we got so many removals on those collections. Like I said, we facilitated those pay for deletes on the valid collections as well, creating more removals. And then what I had mentioned there with the mismatching delinquency dates is how we were able to get so many late payments removed off of their credit report. And in many cases, it wasn't just one late payment, it was a sequence of late payments, right? 30 days, 60 days, 90 days, multiple late payments. In other cases, we were also able to get late payments removed because of the creditor themselves failing to be able to provide transaction history or statement history. The burden of proof is not on the consumer when it comes to credit reporting. It is on that creditor, it is on the credit bureaus. And most people have no idea that we can remove negative accounts, or have no idea how we can remove the negative accounts from the report, excuse me. So a lot of it also is timetable related. There is a set amount of time required for investigation, which is 30 days initially for the credit bureaus. And if they fail to comply with that 30-day timeline, that can allow us to get that negative information removed from the credit report as well. We reach out to the furnishers directly to try to obtain a lot of this information, as I had mentioned here with the mismatching delinquencies. If we get no response from the creditor, we can use that directly with the credit bureaus as well and say, hey, this creditor has failed to comply with our request to prove that this should be on my credit report. And we use that to essentially say, if this creditor could not provide me with this information, how in the world could they have provided it to you? how have you been able to validate or verify this information on my credit report if I couldn't even verify it and it's my account? So we'll use different types of tactics like that to get the results that we want for our clients. And we make the process sound easy. It's tedious. It's a lot of back and forth. Where I think many clients you all may have worked with may have tried the process themselves and may have seen some success, but in often cases it's quite limited, just simply because most people don't know what to do if they are ignored. So in this case, if and it did happen in this case, it happens in many cases, when there's no response to a dispute, when there's the Bureau themselves directly are ignoring us, it's not uncommon. They get about 30,000 letters per day. So many of those letters go ignored. There was a recent article that went out that only about 2% of the disputes submitted in all of 2021 were actually taken care of. 2%. So that just means that the bureaus don't care. They don't care that they're not complying, and the reason why is that the only process that costs the bureaus money is the dispute process. So the credit bureaus themselves, they make money off of the reporting side of things. They make money working with the creditors. A creditor or a collection company, a data furnisher, if you will, pays the credit bureaus in order to report information. If a consumer makes a dispute on their credit report, they now have to spend money utilizing internal resources to conduct an investigation and find out if that item should be on the credit report or not. They don't want to do that. They don't put a lot of effort into it. They don't make those processes sound because there's no incentive for them to do so. And oftentimes the people, if you will, on the other side in the bureaus, most of them are not stationed here within the U.S. And if you've called the credit bureaus recently, you may have noticed that most of their employees are outside of the U.S. They don't understand our own system, and so if you're trying to get something resolved, it can be very difficult. And that's why our clients hire us and why they trust us, because we'll push the bureaus around and we'll get the regulators involved when we need to. So, you know, it is a process that can be elongated by the bureau's failure to have a successful structure internally. But it can be fixed. It's just not a process that happens in 30 days. For this client, it was about 6 months. And we were able to help them secure their dream of home ownership with the help of their loan officer referring them our way. Oh, and then I guess to wrap this client up here, we did also help them work directly with the creditor on judgments to tie those up, so there was no issues at closing there. So that was our first case study of a pretty typical credit repair client with you know, a good amount of collection accounts and just a mixture of negative information showing on their credit report. With case study number 2, this is what I would consider a type of client that most people wouldn't think needed credit repair. And this is a client with excellent payment history, only 1 collection on their credit report, and a median credit score of 692. So not someone you would typically think would want credit repair. So little history behind this client. They were very frustrated. They were referred to us by their loan officer because in the midst of the process of obtaining a mortgage, a collection showed up on their credit report. They had no history of payment issues, no other negative credit history, and was previously in the mid-700s before that collection appeared. Their goal, of course, was to buy a home at the best interest rate possible, and they wanted the collection removed before they finished the loan process so they could have that better interest rate and a higher credit score. So in this scenario, what we did is we reached out directly to that collection agency for validation on the account. We disputed the collection directly with the credit bureaus as well. So we like to take a simultaneous approach to ensure that we can have the fastest process. Where a lot of not collection agencies, where a lot of credit repair companies go wrong, in my opinion, is they will reach out just to maybe the bureaus. And then a couple months go by, then maybe they'll try the collection company, or maybe they won't ever try the collection company. But a lot will only work on one item at a time, or one piece of the law at a time. We're going to barrage the credit bureaus and the collection companies with every law we possibly can right away to try to get results as quickly as possible. At the end of the day, our goal is to get people in homes as quickly as we can. And we provided additional direction to this client on paying down credit card debt to aid in their utilization ratio. So again, when we're working on a client, we're not focusing just on removing negative accounts, but it's what else can that client do to see a credit score increase as much as reasonably possible within the time frame we need. So in this case, we were able to successfully remove the collection account from the two bureaus on the credit report that it was reporting on. So it was just on Experian and TransUnion. So on Experian and TransUnion, we had a 71-point and a 61-point increase. On Equifax, we saw an additional 25-point increase, and this was simply because of taking care of the utilization ratio. So the median credit score for this client, which I neglected to put on this slide here, ended up at 753 from the prior, I think I said it was 692 previously. So we were able to successfully help this client get their credit score higher. And, you know, when a client like this comes along, a collection is so heavily weighted into their score because it's such an abnormal piece of their payment history. It becomes so damaging to their credit. So someone who has a lot of negative marks on their credit report, a new collection may proportionately be worth quite a bit less than an individual like this with strong credit. You know, we've seen a single collection added in on someone's report like this drop a score up to 100 points. So it can be extremely impactful to still work with someone who has minimal negative information on their credit report and still get extremely strong results from that. So the outcome for this lender, this kept the client from shopping around to a new lender. So when they first came to us, the client was questioning whether it made sense to even consider credit repair. Why wouldn't they just go look at another lender who maybe could provide them with better pricing, better rates? We wanted to keep them from shopping around to another lender where perhaps they would have had to pay points or something of that, and maybe not had as good of a lender who was really trying to help them get the best loan possible, not necessarily with the quickest outcome, but with the absolute best outcome for their situation. So this allowed them to get the best rate and have peace of mind when it came to their credit as well, not have that collection linger for 7 years. And we were also able to then help this client's wife also remove the collection from her credit report too. So we were able to help both individuals, and this created a very strong likelihood that they would refer the lender in the future, since the lender did more than just give them a mortgage. It became more than just a transaction for that client, and it's a sticking point, right? It creates trust and builds a solid foundation for which that client's going to remember you. If they want to refinance in the future, they're going to come back to that loan officer because they know that they weren't just trying to sell them a product. They had their oh, Melinda, you had a question. How long did it take to fix this? I am assuming, so let me go back. So for the second client who had one late mark, it was 3 months, or excuse me, one collection, it was 3 months. So on the third month is where we got it removed off of the credit report. So it took a little bit of time. It was the beginning of the third month. We've seen that happen as quickly as, with one client, we had it happen within the first 30 days. It was like 3 weeks, super abnormal. So it can happen, not likely to happen. I would say it's always safe to plan on 3 months. That's the timeline we give every new client if there's just going to be just one item. And that's simply because oftentimes we're fighting back and forth, kind of how I mentioned before. It's usually a battle with the bureaus, a battle with the collection companies, and they have a minimum of 30 days initially to investigate any dispute that we bring forth. So about 3 months in that case, but in other cases, faster if it's just one. But most of our clients, in the first scenario, most of our clients are in the process for about 6 months to 8 months, with the goal of getting to the mid 700s. If they're starting in like the 400s, 500s range. So I hope that answers your question.
It does. I have one other question though, if that's okay.
Yeah.
Backing up just a little bit, did you say that or if they have a medical collection that they do not pay, it stays on forever, and if they do pay it off, it can still stay on there for up to 7 years unless they work with somebody to get it off of there?
So any negative account, whether medical collection or not, will stay on the report for 7 years. If they pay it and they're resetting that delinquency date, that can restart that 7-year clock. So that's the issue with paying collections. A lot of times people will set up repayment plans. We typically caution them in doing that because it can end up lowering your score over time, as every single month now you're reporting a more recent delinquency. So that's going to be specific to a collection account. If it's, let's say, a charged off credit card, so it hasn't been sold to a third-party collection agency, it's a credit card that went unpaid and now that full balance is due because the account's closed and it's been counted as a loss. That account will stay on the report for 7 years as well, right? But as each older negative payment, if you will, reaches 7 years, payments will begin falling off, right? So things will fall off over time. And as something gets older, it becomes less impactful as well. But part of what we'll do is we'll coach the clients in what makes the most sense if they do want to pay something. We have clients who come to us and they say, no, I want to pay this. I just want to get this taken care of. I want to pay it. Well, that's fine. We'll help them with that. If they want to skip the validation process and they want to go straight to offering payment in exchange for deleting the account, we'll do that. If a creditor won't agree to delete the account in exchange for payment, what we look at that point is the statute of limitations, right? We want to know, one, can that collection company or creditor come after the client and sue them, garnish their wages, place a judgment? So all of that's extremely important into determining, does it make sense to pay it? And then secondarily, is it a collection or is it a charged off account? A charged off account, if they make a payment and that balance is then updated to zero, that can help their credit. So that it may make sense in that case to pay it because they'll see a positive impact to their credit score. If it's a collection, it's not going to help their credit. So if it's past the statute, we're not worried they're going to file a judgment or any of the other aforementioned, then maybe it makes sense to wait, let it fall off, because usually that means there's only 1 or 2 years left and it's going to be off the report, and it's already proportionately not worth as much because it is so old. So a lot of if this then that. And so we help guide the clients through all of that. Does that answer your question?
Absolutely, I appreciate it. Thank you.
Definitely. Yeah. Any other questions at all on either of those scenarios or anything else? Okay.
Hi, Ivory.
Yes.
Hello. Hi. Yeah. So on the one that on the case number 2.
Yes.
What it was, you said it was about what, 3 months? What was the, like, how much did they have to pay? I mean,
They didn't have to pay anything. So in that scenario, the collection was proven to be not valid. The collection company could not prove that they owed that debt, so they didn't have any original contract for that collection. It was, I believe, it was AT&T, if I recall properly. And because they had no proof of contract, they had to get rid of it. So what had happened was they sent a bill, just a bill, but without any history going from when an account's current up to the date of delinquency, and without an original contract with that client's signature, it's not considered valid proof. So that's why sometimes there's a little bit of back and forth, because there'll be a little bit of a fight, right? Hey, here's your proof, here's your proof. But the normal consumer thinks that they should pay at that point, where we help coach them. They don't need to. And so we were able to get it removed off the credit report that way, and then they didn't owe it.
Okay. Okay, thank you.
Yeah, definitely. Any other questions? I think you were on mute if you had another question, Nash.
Was that? Oh, no.
It showed I didn't know if you had another question.
No, no, that was
Okay.
it. Thank you.
Okay. All right. We'll go ahead and we will move on. And as questions arise, please feel free to ask. All right. So when it comes to the credit repair process, we are here to help. We're here to help loan officers. We're here to help realtors. Managing a pipeline is a lot of work. And I know I'm not telling you anything you don't already know. You're doing it every day. So we know that as many as 1/3 of applicants fall out of the process at the very beginning. Our job, or our goal, if you will, is to help you keep more loans. We want to make sure that more people come all the way from the inquiry stage to the application stage, all the way to the approval stage. We want to help your borrowers get better rates, get better terms on their loans, by helping them with improving their credit, helping them with improving their debt to income ratios, and everything else that really has to do on the debt side of things, right? Anything that's negative that holds them back, our job is to help propel them, right? Make them look better in the eyes of underwriting. So we also want to take that burden off of you. So while you're trying to do all of the many, many tasks that it takes to close a loan, you also are having to manage giving that advice of what should that person pay off? What credit card should they be paying down to see a credit score increase? And where do they need to go to handle this type of collection and this and that, right? We can do all of that for you. So we want to take that burden off of your plate. So this data right here is from, this is the national data from, where was it? 2020. I didn't put the year in here, but this is all data from 2020. So nationally, there was over 69,000 mortgage inquiries, which resulted in 45,000 applications and 24,000 closings. So only 35% of the applicants actually closed. And that stat that I gave at the very beginning about the 10%, 10 points or more to move up a credit band, all came from this same study. So what we found is that if more people were able to get a focus on their credit, the amount of closings could be significantly more than this 35%. We could stop seeing this 65% loss of applicants. So where we aim to be in the journey of your pipeline is picking up all of the people who drop off along the way for credit. If we can pick those people up, we can circle them right back to the inquiry stage and the application stage, and you can see more closings. So even if you were able to close one more a month, or even fewer than that, let's say 5 a year, the amount to your bottom line could be significantly higher. And over time, cumulatively, it's going to mean so much more because you're going to build a borrower base where those loans come from people who trust you, right? They're going to be more likely to refer you. They're going to be the ones that remember you, come to you for refinances. It creates a stickier client, and that's really what we want. So, and as big as the mortgage market is, if we paid attention, like this says here, to those that have credit issues early in the process, there'd be a lot less fallout along the way. And with our help, we're able to keep you from having to do all that follow-up. So what we do when you refer a client to us is, along the way, we include you on the updates as far as their progress goes. So when we're celebrating a big win, a big jump in their credit score, you get to participate in that. So we want to help more applicants qualify and actually close on their loans. And like I said, build more loyalty. So each client gets a client portal with educational resources where they can see their scores, our updates, credit building notifications, credit report details, and then they can see copies of everything we're doing on their behalf. You on the loan officer side or the realtor side, primarily loan officers would be able to see the score changes over time. We'll send you updates as well, like I said, and reminders to check out the portal. And then it's also a way where you can send over copies of credit reports. So we'll always look at credit reports for you. I know you have the rapid rescoring option. Sometimes it doesn't identify everything. So we're always happy to take a look at a credit report and give you some tips. So I know a lot of our partners already take advantage of that offer, but if that's something you weren't aware of, please make sure you're doing that. We're always happy to give you tips on how to help someone improve their credit score to get a better rate. So when someone first comes to us, and I'll tie everything up here. When someone first comes to us, you refer them, let's say, through that partnership portal. You put their information in, give us a copy of their credit report if you pulled credit. What that does is that automatically generates an email to them that tells them we'll be reaching out to them within 24 hours, or they can tell us what time they want us to call and they can pre-schedule it. We then, if you haven't already given us their report, we'll pull a credit report for them. It's not an inquiry, and we'll review the report and discuss each account on their credit report and the history of that account, so we know what happened that brought them to this point, and we can use that information in our process as needed. We then give every client a credit report analysis. So it's a breakdown of their reports, their scores, why they are what they are, and some additional educational information on how that scoring system works. And then we're putting together a credit building plan after that. So again, that's those different steps they can take that we've talked about in some of those client studies, case studies, excuse me, whether it's paying down credit cards, how to add rental history, utility bills, whether they need to open a secured credit card, and on and on. And then we do the dispute process on their behalf in the interim, and we give them updates each month and work with the loan officer as well along the way. So that is everything that I had prepared for today. Any additional questions I'd like to open up some time now for?
Yeah, I have another one. So how do you help a client who is a little bit older, who has their current house paid off, no car payment, no debt, no credit cards, no credit score?
Sure. No, great question. We help clients that don't have established credit history all of the time. You actually bring to mind a more recent client we have, very similar situation, older individual who pays everything in cash. So we'll help them with reestablishing credit history. And with that, we just do a credit building plan. So that's going to be what actions they need to take to create a credit score. So we look at their credit report. If there's any information on their report that's there, that'll help a little bit. If it's just completely empty, completely blank, then it's a fresh start with just a credit building plan. So we'll help them establish some accounts to create credit history. We have a lot of partnerships with different things like credit card companies or rental reporting companies. In this case, obviously they don't need the rental reporting, but and we'll help them get that information on their report. For most of our credit building clients, they're either older individuals who just haven't gotten debt in a long while because they paid everything off, people that just don't trust debt at all, just don't have it, do everything in cash, or third, a lot of people that have immigrated to the US that aren't familiar with our credit system. For most cases with credit establishment, it's approximately 3 months to generate a credit score. Typically, they end in the low 700s when we create the credit building plan if they follow the steps at the end of the 3 months.
Thank you.
Definitely. Any other questions? Okay. If there are no other questions, we will conclude for today. We will continue to have more and more of these different webinars, all sorts of topics. We also hold these webinars for the consumer side as well. So some that are geared towards borrowers. So you can always feel free to pass those along to any of your borrowers. Thank you everyone for attending, and I'll see you next time.
Thank you.